Good morning. This webinar offers closed captioning. To enable closed captioning, click on the blue widget or the CC in a box located on the bottom left-hand corner of your screen. Welcome to the City of Chicago Department of Business Affairs and Consumer Protection webinar. We have adapted our regular business education workshops at City Hall into these webinars until further notice. Please note, any website or email that I mention will be posted in the chat box. All BACP offices are open to limited members of the public. Masks are required in all BACP facilities. For those seeking business license assistance, we strongly encourage the processing of license online. Business license can be applied for or renewed online at chicagobusinessdirect.org, or you can call 312-74-GO-BIZ. If you are a part of the BACP Entrepreneur Certificate Program, you can get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. To learn more about this program, please visit chicago.gov/business education. Also, this webinar is being recorded and will be available at youtube.com/ChicagoBACP. I will post the mentioned information in the chat box. We encourage all attendees to ask questions. Please use the chat box and send your questions to all panelists. There will be a Q&A session at the end of this presentation. Today's webinar is entitled, What You Need to Know About Your Business and Federal Taxes, presented by LadderUp. At this time, I will now turn this webinar over to Ms. Michelle for us to begin.
Hi, everybody, and I want to thank everyone at the BACP for having us. I'm from LadderUp. My name is Michelle Kuipers. My co-presenter is Mike Madronic, who's from the IRS, and so we're going to have a little bit of presentation from both of us here. And I think that a good way to think about this is the goal for this presentation is going to be to help you know some of the basics about how taxes are different for self-employed individuals, good record keeping for tax time for you and your business, IRS resources for informed business decisions for you and your business, and how to keep yourself protected from tax scams. So I think with that, let's get started. We can go to the next slide. I do want to tell you a little bit about LadderUp while we are here. So LadderUp is a community nonprofit. We help individuals and families with taxes and with financial strategies. So we have a couple of different departments. One of them is our tax assistance program, which offers free tax preparation for individuals and families, depending on income limits. So appointments are open for that right now. If you want, you can go to goladderup.org and schedule an appointment for tax preparation. We also have financial literacy programs for adults to learn about banking and saving and credit building, but we also have programs for students to learn more about the FAFSA government student financial aid programs for college. And then I work in the legal clinic, which offers free legal representation for individuals who have tax controversies with the IRS and Illinois Department of Revenue. And so as the staff attorney at the legal clinic, I get to help with IRS and Illinois Department of Revenue issues, and I get to do education events like this one and help people understand resources and the complexities of the tax system. We can go to the next slide. So let's start with this. So what does it mean to be a self-employed individual from a tax perspective? It means that anyone who carries on a trade or business as a sole proprietor, but also it means independent contractors, so people who are getting paid 1099, like through Uber or other independent contractors. It could mean that you're a member of a partnership, or it could mean that you run your own business in another way. For sole proprietors, the requirements for when to file are different than what people might be used to if they have never been in business for themselves. So the basic question, do I need to file my taxes? And for self-employment income, if you have net self-employment earnings of $400 or more, you do need to file, regardless of, even if you just have 401 net self-employment earnings, you do need to file your taxes. Even if you don't have a filing requirement, sometimes it's beneficial to file, even if you don't have 400 in self-employment income because of your circumstances. So this could be your withholdings, your credits, your dependents, things that might be beneficial to you for filing. We can head on to the next slide. So the next good question is to ask, am I an independent contractor or am I an employee? What is my worker classification? So the main test for IRS to determine whether you're an independent contractor or an employee is a control test. So you're asking yourself, who controls your work? Who controls when you work, what your hours are? Who controls where you work? Are you able to work wherever you'd like? Or are you required to be in a specific location? Are you required to use certain equipment? And who controls the how of when you work? What are the types of processes you have to file? Do you set that? Do you does somebody else set that for you? And can you reject jobs? Are you able to pick and choose what projects you work on, or are you assigned things and you have to follow what you're assigned? Another way to determine if you're an employee is if somebody else is paying for your tools or supplies. If you're an independent contractor, if you're in business for yourself, often you're having to pay for your tools and your supplies. And this is reflected in your taxes, but it is also a good way to determine whether you're an independent contractor or an employee. Often the IRS determines it based on what tax form you receive. So usually employees receive a W-2 form at the end of the year, while an independent contractor will receive some variation of a 1099 form at the end of the year. If you think that you are misclassified, you are able to dispute this. And this is something that I help with through my tax clinic. And so if you are thinking that you should be having your taxes withheld and should be categorized as an employee instead of an independent contractor, there are resources for you. But I think the biggest thing, the biggest difference for an independent contractor or a self-employed person versus an employee is that employees have taxes withheld from their pay, and a portion of their Social Security and Medicare tax is usually paid by their employer. But for independent contractors and self-employed individuals, taxes are not withheld from their pay typically. And independent contractors are responsible for paying their own taxes and their own estimated tax payments during the year. So let's talk more about estimated tax payments. We can go to that next slide. All right. So how does a self-employed person manage their taxes without withholdings? And the answer to that is estimated tax payments. These are sometimes called quarterly estimated tax payments or quarterly payments. So keep an eye out for that phrasing too. But who is required to make estimated tax payments throughout the year? If you owe or expect to owe more than $1,000 in the tax year, you're required to pay quarterly estimated tax payments during the year to the IRS. The rate of self-employment tax is 15.3% in 2022, and this includes your Social Security and Medicare. So one of the benefits of paying estimated tax payments is you are contributing to your Social Security taxes and your Medicare taxes for your future. So how is it calculated? You could think that you just have to do your basic 15.3% of all of your income and pay that. But the IRS actually provides a form to help you calculate how much you should be paying each quarter. And that form is the 1040-ES form. And it helps take into account other things that you would be required to have on your taxes that might lower that amount that you're paying quarterly, your deductions, your standard deduction and things like that. So I do encourage everyone to take a look at the 1040-ES form and try and calculate their estimated taxes following those instructions instead of just doing the base percentage. But I will say that base percentage again, because I saw somebody pop up in the chat. What is that percentage? Is 15.3% in 2022 is the self-employment tax rate. That's just the base rate. So it's not taking into account any deductions that you might have or credits or anything like that. And the IRS makes it really easy to pay your estimated tax payments. They are due once per quarter. If you remember tax day is April 15th, it's easy to remember your estimated. April 15th is the day for the first quarter. June 15th is the second quarter, September 15th is the third quarter, and then January 15th is for the fourth quarter. IRS makes it really easy. You can pay online, you can pay by mail. So lots of ways to make this a painless experience to get those estimated tax payments in by the deadlines. All right, we can go to the next slide. So let's talk about how to make tax time easy and how to keep yourself protected in the event of an IRS audit. Your best tool and your best defense when it comes to making your taxes easy is having thorough records and having accurate records that you're keeping throughout the year. So you're not just scrambling at the end of the year to try and get it all together. And if there's an IRS audit down the line, you will have everything. If you keep these records regularly in the course of your business, you'll have everything you need to respond quickly and painlessly to an audit. So let's talk about some of these record types. A business plan. So a lot of people will know a business plan is a roadmap to your business, and it helps indicate sort of your business's financial needs at various stages. It is also helpful when you come to your taxes because things that are expenses in the course of your business are going to be sort of informed by what your business type is, and your business plan is a good indicator of what type of business you have and what type of expenses are going to be reasonable for your business type. The BACP actually offers a lot of resources online for determining a business plan and helping you along that path. But I will offer a nonprofit that is kind of helpful in this realm, which is score.org. Score.org. They are a business mentoring nonprofit. You could go for free and get a business mentor and help discuss things like forming a business plan and other strategies about your business. But let's talk about the next slide, a business calendar. So here's an example of what a business calendar might look like. This is a handwritten one. And you don't have to have a handwritten. Everything I'm going to show is sort of an example of a handwritten one, but there's plenty of apps and online tools for having calendars. But I will stress that it's probably in your best interest to have separate ones from your personal calendar. So if you do your personal events on your iPhone calendar app or on a Google Calendar, it is good to have a separate one for your business just for the ease of record keeping and to keep everything organized and not confused with personal events later, because it's hard to recall these things when you get months and months out. So this is an example of a calendar for someone who's a sole proprietor massage therapist. And so you can see he's got like a massage conference that he went to, he's got a business lunch, and then he's got some actual massages he has scheduled. So this is going to help him during the year with organization, but it's also going to match up with his tracking of income and expenses. He went to this conference on June 3rd. His expenses are going to reflect that he was out of town, that he was having some lunches that were required because he was traveling, and he's got massages scheduled for June 6th. So he's going to have income showing shortly after that from getting paid from those, and it'll match up with his other business documents in the future if he needs to demonstrate where those income and expenses came from. So let's go to the next slide. This is an example of a handwritten logbook of income and expenses. It's organized. It's pretty simple. Like, you don't need a lot of details when you're having these documents. This has got the date. It's got the description of what happened. It's got whether it's income, how much income, whether it's expenses, how much expenses. There are, again, online resources, apps. If you want to do it in Excel, you can do it digital, you can do it handwritten. This is what's best for you. The most important part is the keeping track of it. So it's important to keep these because if something is disputed later, or if you're doing your taxes later, you want to be able to total up those expenses easy, total up your income easy. And if something is disputed, you'll be able to show, look, this is exactly how much I spent. This is exactly how much I made. I do want to say, just a note here, is that just because you write it down, it doesn't mean it's going to be an allowable expense or an allowable deduction. So in this case, it's a little small, but our theoretical sole proprietor massage therapist has one of his expenses is a gift that he gave to one of his clients of $100 of a bottle of champagne. There is a limitation on gifts of $25 business deduction per gift per person. So just because you wrote down that he gave a $100 gift of champagne, it doesn't mean that he's going to be able to deduct that. It doesn't make it allowable, but it is good for tracking purposes that he wrote it down, and we can determine whether that is allowable or not. All right, let's go to the next slide. Another really key thing to keep track of is mileage. So this is a good example of a little mileage log. Again, it's pretty simple. It just has the date, it has where he started, where he went, and then his mileage when he did it, and whether it's business mileage or personal mileage. So in 2021, the standard deduction rate for miles was 56 cents per mile. In 2022, the IRS has just increased it to 58.5 cents per mile. And this is what someone who uses their car for business is going to be able to deduct for their mileage. And it's important to keep track because it's going to add up, and it's something that's easily forgotten. I don't know about you all, but I get out of the car if I'm in a hurry, I'm going fast, I don't even look at it. So it's really important to keep this, write it down, because if you get to the end of the year and your tax preparer is asking you, well, how many miles did you use for business, and you're drawing up a blank, then you're probably missing out on credit that you'd be able to get for it. But there is one important rule about tracking your business miles that most people don't know, and it is about commuting. So let's go to the next slide and talk about commuting. So business miles are deductible, but the commute is not deductible. And the commute is the first and last trip that you make of the day. This is if you're an employee and not a business owner or self-employed individual, your commute is driving to work and then driving home from work. And for employees, you're not able to get credit for your commute, and that doesn't count as work time. And for self-employed individuals and business owners, typically it does not include your commute either. So if we look at the diagram on the right, our self-employed massage therapist, Mark. So this is an example of Mark. He goes to his client's house, he goes to a different client's house from that house, and then he goes to a printing company, and then he goes home. So his commute to the trip from his home to the first client's house, that's commute, and he's not able to deduct those, but he is able to deduct the other trips that he makes throughout the day. And then when he eventually goes home, he's not able to deduct that trip from his final location to his home. An exception is that middle one. An exception is if your home office, or you're using a home office and you're able to deduct a home office, then your commute is your trip from your kitchen or your bedroom to your home office space. And so in that example, whenever Mark leaves his home office, he is able to include all of the mileage from all of those other locations. But I will say that there's a lot of rules regarding home office space, and typically it must be a completely separate space inside of your home that's strictly for business use. So if you set up your laptop at your kitchen table that you also eat dinner with your family at, that is not going to be a home office space for the purposes of tax use. But this commute example is really important. Let's look at an example of someone who drives for Uber. So if you drive for Uber and you're leaving your house to go to your first pickup for Uber, that's commute. But every single pickup you make after that is not commute, and that's deductible miles up until you decide that's the last one and I'm going to go home for the day, and those miles don't count anymore. So it's really, really, really important to keep that mileage log for these purposes. And then I think we will go to the next slide. So when you're filing your taxes, when it comes down to what forms you file, it really depends on what business entity you have. Most self-employed people who are out on their own, they might be a sole proprietorship, and they will file a normal 1040 tax form, and they'll use the schedules included, Schedule C, Schedule SE, to claim their business income and losses and deductions on there. Partnerships use Form 1065, and then we get into the types of businesses that you have to be registered with the state and you have to have those entities. So limited liability companies, corporations, and S corporations, you need to be licensed. You need to have those registered with the state. And the BACP has a lot of info about licensing and how to do that. And then Mark is also going to talk a little bit about IRS resources on the structures. Or no, Mike, sorry, Mike is going to talk a little bit about IRS resources and structures. So it's important to be picking the entity that is the best for your business and your business purposes, and to make sure that you're filing the right forms for your business entity. I will also say that if you're an employer, we just talked about the types of forms that employees get and independent contractors get. If you're an employer, you have to be issuing those forms, and there's other payroll tax forms that have to be filed quarterly also. So keep in mind, if you are an employer, that you have more tax burdens on you, to make sure that you're keeping up with everything. But I think with that, we'll hand it over to Mike for the IRS portion and to talk about some resources that are available too.
Thank you, Michelle. Yes, I've kicked Mark out of the office, so it is Mike who is coming to you. Let me introduce myself. My name is Mike Madroncic. I work for the Internal Revenue Service, and actually work when the office is open out of the downtown Chicago office. And within IRS, I work for an organization called Communications and Liaison, and the sub-organization that I specifically work for is called Stakeholder Liaison. So Stakeholder Liaison works with small business organizations, tax professional organizations, to bring information about IRS resources, federal tax law, IRS processes and procedures, bring that information to those groups, trying again to let everyone know what's going on with the IRS and how it may impact their business as a tax professional, their clients, the taxpayers, and the small business owners. So I am a resource for you. I will give you my contact information, and feel free to reach out if you have any questions that we either can't get to in today's presentation or I can't answer. I will be happy to go back and research it and get information to you. So I do want to thank Michelle, and I do want to thank Stella from the city of Chicago for allowing us to be here today. And of course, thank you for joining us. And what I'm going to do for the remainder of the presentation is to uh, go through IRS resources that are available for individuals who are currently operating a business, entrepreneurs currently in business, or would-be entrepreneurs who are thinking about opening a business. The IRS has a lot of great information to help you put together a business, understand your federal tax responsibilities as a business owner. So let's get started. And a lot of the slides that I'll present today will include something like what you're seeing right here, which is a screenshot. We'll have screenshots from IRS.gov, because after you spend your hour and a half with us today, the great place for information from IRS is, of course, IRS.gov. So the information being presented today is designed to help you understand your federal tax responsibilities when you start and operate a business. IRS wants to make this as easy as possible by providing useful resources on IRS.gov and other websites, including we'll look at somewhere down the road here this morning. It's called IRSvideos.gov. This slide that you're looking at right now identifies tax information for businesses site within IRS.gov. And you can see at the top left of the screenshot, if you go to the IRS.gov homepage, if you select the File tab that you see up at the upper left, and then the Businesses link, it'll bring you to this site that we're looking at, tax information for businesses. Now, as Michelle already discussed a little bit, two of the major pitfalls that small businesses have are poor record keeping and a failure to recognize all items that constitute gross receipts, which is otherwise known as taxable business income. Now, during the presentation, we want to talk about several best practices that small businesses should use in order to avoid tax problems. And as Michelle already talked a little bit about, we'll talk about good record keeping, reporting all your taxable income, separating your business and your personal expenses, making sure that the tax returns that you file are accurate, because in the end, even if you may have somebody else prepare your return for you, it is your return and you are responsible for it. IRS wants you to use the electronic filing options that are available in order to both file your tax returns and pay your taxes. We want to help you avoid tax scams. Unfortunately, there are a lot of individuals out there who are trying to suck people into various scams. We want to help you avoid those. We want to help you choose, if you do choose to use a tax return preparer, to choose that preparer carefully, and we'll show you resources that are available. So, before we go on to the next slide, just take a minute and look at this slide. I guess this is kind of the starting point for looking for information on IRS.gov about tax information for your businesses. You can see on the left-hand side, there are links that will take you to small business and self-employed websites, so we'll show you in a few minutes. Information for corporations and partnerships. Over there in the middle, how to prepare your taxes, how to file, and tips on how to run your business, including over on the right-hand side, links to sites that talk about starting a business and operating a business. And down there at the bottom, more detailed information. Michelle started us off talking about the various business types, but here, if you go to these links, you'll get detailed information defining what sole proprietorships are, partnerships, corporations, S corporations, and limited liability companies. So let's move on to the next slide. You can see up at the top of the screen, I've highlighted what I call the crumbs, the trail on how I got to this particular website. And this is the starting a business you can see there are a lot of links to help get you to good information that you'll need when you're starting a business. Down there in the middle, you can see the links. Is it a business or a hobby? And we'll talk about that on the next slide. Selecting a business structure, business taxes, record keeping. So a lot of great resources for you, and we'll go through most, if not all, of these links over the next few slides. So let's go on to the next slide. We're going to start by discerning, making sure that we all understand the difference between a hobby and a business. Now, generally, an activity qualifies as a business if it's carried on with a reasonable expectation of earning a profit. And in order to make this determination, taxpayers should consider the following factors. Does the time and effort put into the activity indicate an intention to make a profit? Does the taxpayer depend on the income from the activity? If there are losses from the activity, are they due to circumstances beyond the taxpayer's control, or did they occur in the startup phase of the business? Has the taxpayer changed methods of operations to improve profitability? Does the taxpayer or his or her advisors have the knowledge needed to carry on the activity as a successful business? Does the activity make a profit? Can the taxpayer expect to make a profit in the future from the appreciation of assets that are used in the activity? Now, the IRS presumes that an activity is carried on for profit if it makes a profit during at least 3 of the last 5 tax years, including the current year. Now, taxpayers who make money from a hobby must report that income on their Form 1040 individual taxpayer tax return that's filed with the IRS. Expenses that taxpayers pay to support the hobby are not deductible on the tax return. Now, if you're operating a business, both the business income and the business expenses are reportable on a business tax return. Go on to the next slide. Now, Michelle spoke a little bit about the types of business structures, and there you can see on IRS.gov we have a whole page devoted to helping you understand the differences between the different business structures that are available for you to operate within. Just a brief mention of each, so brief details. A sole proprietorship is someone who owns an unincorporated business by himself or herself. A partnership is a relationship existing between 2 or more persons who join to carry on a trade or business. Each person contributes money, property, labor, or skill and expects to share in the profits and losses of the business. Partners are not considered employees. Now, you can also form as a corporation, a C corporation, with the letter C referring to a section of the Internal Revenue Code, or an S corporation. Now, the profit of a C corporation is taxed to the corporation when it's earned, and then it's taxed to the shareholders when distributed as dividends. This creates a double tax. And S corporations are corporations that elect to pass the corporate income losses, deductions, and credits through to their shareholders for federal tax purposes. So, with very limited exceptions, there's no taxation going on at the S corporation level. It's all going on at the shareholder level. In addition, there's limited liability companies, and that's a business structure allowed by state statute, and each state may use different regulations. Check with your state if you're interested in starting an LLC. Now, owners of an LLC are called members, and most states do not restrict ownership, so members may include an individual, corporation, or other LLCs and foreign entities. So those are just a brief discussion of the business structures. If you go into that website, click on the links, you'll get a lot of great detailed information to help you understand the differences and help you determine which of those you want to use to operate your business. Going on to the next slide, as I mentioned, if you click on the links, you'll be able to go in and get detailed information on each type of business structure, including, and this is an example, you're looking at an example for the sole proprietorship page, but the website identifies for you the types of taxes that, in this case, a sole proprietor is liable for, and how the sole proprietor reports the business operations to the IRS. You can see if you're on that first column, it says if you're liable for income tax, operating a sole proprietorship, you'll file a form identifying the operations of the business, the financial operations. So typically there's income tax involved. And if you've got that, you would then file the forms located on the right-hand side in that column, and so on down the line. The types of employment tax forms that you would need to identify for the IRS, the compensation paid to the employees, the taxes of income and Medicare, Social Security taxes that you withheld from the employees, and then sent on paid to the IRS. Go on to the next slide. Now, in most cases, when you start a business, an employer identification number is needed. In most cases, not all. There's a site within IRS.gov, as you can see, where it discusses employer identification numbers and identifies there in all the links a number of questions that you might have and provides the answers in regards to employer identification numbers. Employer identification number, the acronym EIN, it's also known as a federal tax identification number, and it's used to identify a business entity. Generally, as I mentioned, businesses need an EIN, and you can apply for an EIN from the IRS. You're getting these from the IRS in various ways, but the most efficient and the best way is to go online at IRS.gov and apply for the EIN. And that process, that online process, will lead you through a number of questions that you'll have to answer to determine whether or not an EIN is actually needed in your specific situation. So go to that site and get more information on EINs. Going on to the next slide. Business taxes. We've talked a little bit about the fact that when you operate a business, there's typically income tax for most business structures, or a number of the business structures. Again, a few of the business structures, the income in losses, credits, deductions are all passed on to the shareholder. So that entity would provide that information to the shareholders or the members, and those individuals would incorporate that onto their Form 1040, which is the individual income tax return that we all file as individuals. But business taxes, you can learn more about business taxes at this site. Of course, there's the income tax, estimated taxes that Michelle discussed, self-employment tax if you're self-employed, and again in that situation, typically myself as an employee of the IRS withholds not only income tax but Social Security, Medicare taxes, and also in addition to withholding from my pay those Social Security, Medicare taxes, the IRS pays its portion of Social Security and Medicare taxes on the wages that I earn. When you're self-employed, you don't have an employer, So you're not only paying your own taxes in terms of Medicare and Social Security, but you're paying the employer's share also. So that is what self-employment tax is all about. If you've got employees, you're paying employment taxes, which are, as I just mentioned, in my case as an employee of the IRS, um, the Social Security and Medicare taxes that are being withheld from my pay, you as the employer would do that for your employees. There's also excise taxes that employers sometimes pay. So let's go on to the next slide. You go to the business taxes slide or section of IRS to find out more about the types of taxes you would pay. And here's a little more detail from the site regarding employment taxes and excise taxes. So again, great resources on IRS.gov to help you understand what your federal tax responsibilities. Now, employment taxes, getting a little more detail on the employment taxes that we've discussed. These are the types of federal employment taxes that must be deposited on a timely schedule. If you've got employees, you're responsible to withhold and deposit not only the federal income taxes withheld from your employees' pay, but the Social Security and Medicare taxes. And you also, as an employer, have federal unemployment tax to pay. These are all payable to the IRS. Get an understanding of those taxes through the sites that we've just gone through. I'll also show you in a little bit another IRSvideos.gov site that has more information about that. Now, IRS understands that as a entrepreneur, you've got a lot of things on your plate. Most important of which is running that business and making sure it's profitable so you can stay in business. IRS understands that entrepreneurs look for help and guidance from experts. And in one area we've been talking about employment taxes, employers go out and do use third-party organizations not only to calculate but also sometimes to pay the payroll taxes of your organization to the federal government, the IRS. So the IRS offers you help when you're going out and outsourcing the payroll function. Understand, as I mentioned at the beginning of the presentation, even though you may outsource the payroll function to a third party, you are responsible for everything that is filed and paid in regards in the operation of your business. So if you outsource the payroll, make sure that there are checks and balances, that you're understanding exactly what the payroll company is doing, that you're seeing that the payroll is being paid, and that the payroll tax forms are being filed by this third party if you choose to use that type of resource. Go to this website and you can get information on third-party arrangements, including payroll service providers, understanding what those organizations can do for you as the business and the business owner, and making sure that you are checking up and if you let them run the payroll, that you're checking to make sure that everything is being done properly and on time. Now, we've talked about record keeping, how critical that is when you operate a business. IRS has resources that you see here on this screenshot that are available for you, talking about why you should keep records, what type of records you should keep, why they're not only important for income tax purposes, but also to help you run your business, to help you understand what's going on in your business so that you can make critical decisions to help keep it profitable and running smoothly. Now, understand that record keeping is a requirement under the Internal Revenue laws. There is a requirement for taxpayers to keep records. The law states that business owners shall keep such permanent books or records, including inventories, as are sufficient to establish the amount of gross income, the deductions you take, any tax credits that you might take on your return, or other matters required to show by such person in any return of tax or information. Not only are employers filing tax returns identifying the amount of tax or taxable income or losses that might have occurred during the operation of the business, but also you're filing information returns with the IRS. For example, the IRS, as my employer, is filing a Form W-2. And I think most of you as employees, if you've ever been an employee, you've received W-2, which identifies the amount of wages that you earned and the taxes that were withheld. Well, there are other types of information returns that business owners will need to provide to the IRS. And you can find information here on IRS.gov. Now, what are, again, the uses of records? Most importantly, for our purposes that we're talking about here today, to prepare the tax returns. Also, as just as important, to monitor the progress of your business activity, to help you prepare financial statements. If you need to go in for financing, the banks and the other lenders will need financial statements to help them understand your business and whether you're a good credit risk. Record keeping's uses are, again, down at the bottom of the screen to identify receipt sources, track deductible expenses, and support items on the tax returns. As Michelle said, it's not enough just to have a logbook that identifies income and expenses. If you're audited by the IRS or any other agency, the IRS agent is going to come in and need to see the supporting documentation that supports the items in your log or your financial statements, and more specifically on your tax return. Go on to the next slide. Whoops. So maintaining business records is very important. And as Michelle said, you can choose any record keeping suited to your business that clearly shows your income and expenses. Except in a few cases, the law doesn't require any special kind of records. However, the business you're in affects the type of records you need to keep for federal tax purposes. Your record keeping system should also include a summary of your business transactions. And in most small businesses, the business checkbook is a main source for entries in the business books. On the next slide. Now, in addition to the income and the expenses that are generated when you operate a business, businesses typically purchase assets. Restaurants will buy stoves, tables, etc. That's an example. So you've got to keep records of the assets that are purchased, including the purchase price, any improvements that you might make, depreciation deductions taken. So depreciation, Say the restaurant bought a stove that costs $5,000. Well, depreciation under the tax system, you're allowed to take a deduction in the year that you purchase the asset, a certain amount, and then deduct the remaining portion of the cost over the life of that asset. So you may have spent $5,000 in the year 2022, but you're only able to deduct, say, $500 that first year. And then over the remaining 9 years, deduct the other $500. That's what depreciation is. You'll also want to keep records of your use of the asset, when you dispose of it, and the selling price and any expense associated with selling that asset. Those are all things that you'll need to keep track of for your financial and your tax purposes. So let's talk a little bit about a small business record keeping system. It's critical, as we've just identified, to your success. And let's talk about a few of the items that we have discussed a little bit briefly here and there. But let's talk about business checkbooks and the other items. They're listed on the screen. Burden of proof. You've got to prove the entries that are on your tax return, in your financial statements. You've got to prove those items. You must be able to substantiate the elements of the expenses in order to deduct them on your tax return. Generally, taxpayers meet burden of proof by having the information and the receipts for the expenses. You've got to keep adequate records to prove your expenses, or have sufficient evidence that will support your statements on your tax return. You've got to have documentary evidence such as receipts, canceled checks, or bills to support the expenses. Let's talk about now record keeping timeframes. Now, the length of time you should keep a document depends on the action, expense, or event that document records. Generally, you've got to keep your records that support an item of income or deduction on a tax return until the period of limitations for that return runs out. Now, the period of limitations is the period of time in which you can amend your tax return. So if you file your tax return, but then later understand that you made a mistake, there is an amendment period that in which you can amend the originally filed tax return, or that the IRS can assess additional tax. Now, also, you want to keep records that are connected to the assets. Keep the records relating to property until the period of limitation expires for a year in which you dispose of the property in a taxable disposition. Oops, sorry. Let's go on and talk about electronic records. Now, those records that you keep electronically, you have the same record keeping requirements as if you had paper documents supporting the items you identify on your tax return. Electronic records are generally accepted by the IRS. Always check if you're being audited. Check with the auditor assigned before you submit any electronic records to that auditor. Let's go on to the next slide. Now we need to protect financial and tax records. It's very important. Planning to do in a case of a disaster is very important. It's an important part of being prepared. IRS encourages taxpayers to safeguard their records. And there's a publication that would help you. If you're ever in a situation where you are involved in a disaster, There's this publication 584B, and let's say your business records or your business assets, everything's been wiped out or a lot have been destroyed. You can use this publication to help you recreate the items of records and assets that you had prior to the disaster. Now let's go on to the next slide and talk about resources that are available for you on IRS.gov to help you operate your business. You're looking at that screenshot from IRS.gov, operating a business and all the resources that are available for you, including record keeping. We've just gone over that. It'll get a lot of detailed information for you. So that is another great resource for you. Let's go on to the next slide. Supporting business documents. Let's talk a little specifically about a business bank account. You should establish a separate business bank account for that business. Don't mix your personal and business transactions. Always reconcile that account regularly, meaning reconcile the records that you have and are kept in the business bank account and your records against what the bank is telling you it has in terms of transactions flowing through that account. Retain your deposit information and the receipts. That's going to back up the income that you identify in your financial statements and on your tax return. And use your business account just for your business transactions. Keep those business and personal expenses or transactions separate. Can't emphasize that enough. Going on to the next slide, talking about how you document gross receipts. Those items listed there on the slide are ways to document the receipts that you bring into your business. Very important to keep those and back up the numbers that you report in your financial statements and the tax return. Oops, sorry. It's very important to report all the taxable income you receive on your return. As it says there, most income is taxable unless it's specifically exempted by law. There is an IRS publication that will help you determine whether the income you've received is taxable or non-taxable. And that is publication 525, which is entitled, oddly enough, Taxable and Non-Taxable Income. At the end of the presentation, I have a whole list of publications that are available for you on the slides themselves. So just avoid trouble. Keep great records. So we talked about purchasing assets that are used in the business. How do you document those? Well, a lot of times you're using checks to pay for it. Credit card slips if you're paying credit by credit card statements, invoices that you receive from the vendor from whom you've purchased the item. Those are all excellent examples of the types of documentation to keep. For the expenses that you pay, again, checks, bank statements, the account statements that I just mentioned, credit card sales slips if you're paying by credit card, the invoices received from the entity from whom you purchased the items. Those are great ways to document the expenses that are identified on your tax return and financial statements. Now, the top 3 expenses that if you ever are audited by the IRS, The top 3 expenses that are reviewed by the IRS are those that are listed on the screen there. There are publications to help you understand the types of home office deduction that you can take. I'll show you on the last slides that are available in today's presentation, the types of publications to help you understand what can and cannot be deducted. There is a publication specific to travel, gift, and car expenses, and that is publication 463 to help you understand the types of expenses associated with business travel, business gifts, and the business use of automobiles that can be deducted. And it will also identify the type of documentation. Michelle went over a type of a way in order to identify your auto expenses and other expenses. So she did a great job up front. There is the publication that will provide a lot more detail and help you understand what expenses can be deducted on those types of business expenses. Now, in addition to the business expenses that we've been talking about, there are credits that are available for you as a business owner. Now, credits with an expense, the expense will reduce the amount of your taxable income, but a credit will dollar for dollar take away taxable income. So it is a great benefit for taxpayers, and the credits are made available through the federal tax law to encourage behavior by business owners. For example, there are opportunity zones that are listed there as one type of credit, and this is encouraging business owners to take capital that they have, cash that they may, and invest that cash in business in opportunity zones that are located throughout the country. These are generally areas of communities that need the benefit of having businesses operating in those communities. So again, the credits are available to help encourage specific behavior, to help businesses and to help those businesses hire employees and help those employees, help those individuals. So a lot of great credits that are available for you. You could look into. On the next slide, the tax law provides business owners an opportunity not only to save for their own retirement, but to help their employees, if they have employees, save for their retirement. And there's a lot of great information about the types of retirement plans that are available for you as a business owner. Again, not only for yourself, but for your employees. There's tax advantages to helping employees contribute to their own retirement and to your own retirement as a business owner. There is a publication, and it'll be identified on the last slides, but specifically IRS publication 3998, which is entitled Choosing a Retirement Solution for Your Small Business, is available in addition to the resources here on IRS.gov. Now, as I mentioned earlier, we understand that your highest priority is to operate your business and to make sure that it's running profitably in order to maintain the business. The IRS understands that you often rely on preparers, tax return preparers, to help you prepare your tax return. And we want to provide you with information to help you make the determination as to who helps you prepare your tax return. Remember again, in the end, it is your responsibility to make sure that the return is filed and that the information on the return is correct. But you do, many people, many business owners rely on tax return preparers. So this particular site within IRS.gov helps you determine what types of preparers are out there, meaning what types of credentials can they have, and also where you can find tax preparers on this site, which is the directory of federal tax return preparers. And it identifies preparers with select qualifications, for example, a CPA, an enrolled agent, and that previous slide will identify for you what types of return preparers are out there and can help you determine which preparer you want to help you with your returns. Now, understand that tax return preparers do have responsibilities. The law requires a paid preparer to sign the return, to complete all the info in the space provided for paid preparers. They've got to provide you with a copy of the return. They've got to retain a copy of your return or a list showing your name and social security number for 3 years. Return preparer can only use your info to prepare and file your tax return with the IRS. Understand that it's a crime for a preparer to disclose your return information to others. As I mentioned earlier, as the taxpayer, you are responsible for the information that's provided on the return and it's filed with the IRS. So it's important to review your return for accuracy. It doesn't matter who prepares the return, you're ultimately responsible. And remember, if there are errors, it's not the return preparer who's got to pay any additional taxes and interest. It's the taxpayer. So review the return. Anytime you file a tax return, always review it for accuracy. Be sure all your income's reported. And never sign a blank tax return. Never sign a tax return in pencil. Now, a few of the most common tax return errors are incorrect or missing social security numbers, incorrect tax entered based on taxable income and filing status, computation errors, withholding an estimated tax payment entered on the wrong line, math errors. So review the entire return because any errors may delay processing of your return. We also strongly encourage that you use electronic filing to help mitigate some of these issues. That the electronic filing, the programs will help catch math errors or eliminate math errors altogether. Let's go on to the next slide. As you can see, in regards to filing or paying your taxes, we have additional information on IRS.gov. And we'll talk about some of those items now. We mentioned choose e-file. It is the most convenient, easiest way of filing your taxes. With COVID, there's been, unfortunately, situations where the IRS has had to move people out of the service centers, and that has caused delays, especially when filing paper returns, because you've got to have the human involved in the processing of that paper return. Choose e-filing. Again, it's the safest, most convenient method. If you're going to receive a refund per your tax return. Have that refund directly deposited into a bank account that you identify on the return. If you owe, if the tax return you file says that you owe taxes, use electronic payment options to make those payments, and we'll show you a source for you, nor a resource for you in order to make those electronic payments. Make sure your preparer offers the e-file option. Again, the easiest, most safe way to do filing. We talked about you should pay your taxes electronically. And here is the resource to help you do that. This is a free resource. It's called the Electronic Federal Tax Payment System, EFTPS. You sign up and you can make your payments on your business accounts directly to the IRS through the EFTPS. Now, if you're using for example, we talked about the fact that a number of business owners will use a payroll service to do their payroll. You can have the payroll service file your tax returns electronically and also make your payments electronically through EFTPS. Now, EFTPS will allow you to go in and, of course, you're going to create an account, and EFTPS will allow you to go in and see the payments being made. So this is a great way for you to keep track of what any third-party vendor that you're using in order to process tax payments is doing for you. Choose EFTPS. We mentioned up front that we want to provide you with resources to help avoid abusive tax scams. And here is a site within IRS.gov that talks about tax fraud alerts. Unfortunately, the IRS sees every year a lot of tax fraud being committed, and these fraudsters try to trick you into taking part in the fraud. Some types of fraud that we see are hiding income offshore, fraudsters going in and stealing information from your business in order to file tax returns and claim refunds. So keep your business information secure. So there's this resource for you to help you understand tax fraud alerts. Now, there are some great resources that you can subscribe to. These are free newsletters that the IRS will send to you right to your email inbox, and they will often include information about the latest frauds that the IRS has seen to alert you. So we will show information to you in just a minute on how you can sign up for these subscriptions. Now, in addition to the business sites that we've seen so far during the presentation, drilling down specifically to small business owners and self-employed business owners, there is this Small Business Self-Employed Tax Center with a lot of great resources for you to help you understand your federal tax responsibilities, many of which we went over already in the presentation. Drilling down to the Self-Employed Individuals Tax Center, this is some of the information that you'll find on that site, and it's specifically for self-employed individuals. In addition, we've got a website to help you understand specific professions, and that is the Industries Professions Tax Center. In addition to the links to the specific industries that you see On the screenshot, we've also got information for industries where tips are customary, and that's, of course, a lot of small business owners or restaurant owners. For the marijuana industry, for the real estate industry, there's a specific restaurants tax center and also a specific tax center for trucking, the trucking industry. Help you understand the specific tax responsibilities in those industries. Now, I mentioned that there are e-news subscriptions that you can subscribe to. This is all free. This is your tax money, tax dollars being put to great use to help you understand what's going on at the IRS and how the tax law can be used to help you run your business and to understand your responsibilities. I've circled two that I think are importance to you. E-news for small business and e-news for employee plans. Now, employee plans refers to the retirement plans that we went over a few slides earlier. So there is specific information. If you've got a retirement plan set up for you and your employees, you can get information there. The e-news for small business typically comes out every Friday, and you can get the latest and greatest small business news from the IRS. If you are a social media fan, you can get the latest information from IRS through IRS social media resources. You'll see there on the right-hand side the various Twitter handles, YouTube, IRS videos that are available for you. Now, these are typically all very short, and they point you to more detailed information on IRS.gov. So it's another great way to stay on top of what's going on. You also have telephone assistance for business customers. You can see the resources that are available for you. The down there at the bottom, the practitioner priority service is available for tax professionals to help them specifically deal with questions they might have. The business's specialty tax line is for business taxpayers. And down there at the very bottom, there's tax exempt and government entities. That's the IRS organization in which the employee plans or the retirement plans groups provide assistance for those who might have small business retirement plans. I mentioned somewhere through the presentation that in addition to IRS.gov, there's another website, IRSvideos.gov. And within that site, there is a tab set up specifically to help business taxpayers, and that's what you're looking at the screenshot. This is available 24/7. It's all free, and these are videos to help business owners understand everything that we've been talking about today. So again, available for you when you're available. Check it out. And specifically on IRSvideos.gov, there is, I think I referred to it, it's kind of like near the beginning, a small business tax workshop. I probably didn't identify it specifically, but here I am. You can see on the right-hand side, there are 8 lessons to this small business tax workshop, and it will go into much greater detail that you can get here in the hour you had with us. Lessons about federal taxes in your business. You're a Schedule C filer, meaning that you're a self-employed individual and you're not incorporated as a corporation or you're not a partnership, that you're a small business owner filing a Schedule C with your Form 1040 to report the operations of your business, you can get information in Lesson 2. Lesson 3, filing and paying taxes electronically. There specifically in Lesson 4 is information if you're using your home for business purposes, the possibility of being able to deduct expenses associated with the business use of your home. Lesson 5, you've got employees, you're running a business, you've got employees. What do you need to do? If you've got independent contractors that you're using in your business, what do you need to do? Lesson 6, managing payroll. Lesson 7, making those deposits to the IRS of the income tax and the employment taxes. And then Lesson 8, hiring people who live in the U.S. who aren't citizens. A great, great resource for you. Sorry. In addition, in order to keep track of all the filing dates and the other responsibilities, there is an IRS online tax calendar that you can use to keep track of what's going on, what your responsibilities are, and when those due dates are. Now, the IRS is going more and more to online tools, and specifically right now, the tools are geared to individual taxpayers. I'm sure that IRS is working on putting together online tools for business owners, like we saw with EFTPS. They're going more and more to the online services. These next few slides just wanted to make you aware of the online tools available for individual taxpayers. So if you're a business owner and you're filing a Schedule C, information that is filed with your Form 1040, which is the form filed by individual taxpayers, there's information available for you online. You can see you can create there at the bottom your own online account at IRS.gov in order to get information about your tax account online. Oh, if you have the child tax credit, there was information available for you online. My refund, where you can get information about the status of your refund. You can get tax records, your own tax records online. You get information about the payments that you've made to IRS online. And there's you can pay directly from your bank account online. You can find information about your amended return. And then there's the mobile app where you can track your tax records, check refund status. So IRS is going more and more online and will continue to do so over the next years. I mentioned earlier, there are a great deal of publications to help you get more detailed information, to help you understand, to find answers to your questions. You'll see a group here on this slide, another group here. Here's information. We talked about retirement plans. More information. More. Here's more. I think they're all specific to retirement plans, except for that last one, where there's a publication 4591, small business federal tax responsibilities. Just wanted to take the last few slides here to talk about other federal resources that are available for entrepreneurs. A great resource is Small Business Administration. The SBA is set up to help small businesses not only start but to operate. So a great resource for you is sba.gov. United States Department of Commerce. It is a great resource for you with certain specific information. You can see there one department of the Department of Commerce, or one organization within the Department of Commerce, is the Census Bureau. And the Census Bureau puts a lot of great information together to help small businesses. Go check that out. There's USA.gov, which is kind of the one-stop website for all things USA federal government. You can see at the very top, I've highlighted there's a section for business. Check that out. And there's the Spanish language version of that site. The Social Security Administration, down there at the bottom of the screen, you can see there are links for employers, the self-employed, to help you with filing. You've got to file W-2 information if you've got employees with the Social Security Administration. But also there are other resources available for you. You can do the filing online electronically. And the U.S. Department of Labor. U.S. Department of Labor will help you, as you can see there in the screenshot. There are great resources to help you train employees. So check out the U.S. Department of Labor website. I mentioned earlier that I've provide you with my contact information. I am in downtown Chicago. So if anyone needs some assistance that you think I can help you with, please feel free to get in touch with me. And with that, I will hand it back to Stella. Thank you.
Thank you so much for all of your presentation, both Michael and Michelle. I hope that all of our attendees were able to get the information that they need. Again, a copy of this presentation will be posted to our YouTube page, hopefully by Tuesday. That is youtube.com/Chicago BACP. So let's see if we have any questions. I see a few. First question, are gift cards or flowers for bereavement purposes deductible? For an employee, a client?
Yeah, I can take this one. So, I talked about the gifts of being a gift deduction limit of $25 per person that the gift is given to. And so this applies for business gifts, basically, like gifts to, people that you do business with, but also to the employees. But I will say that for employees, like the gift cards, the flowers, $25 for the deductible per person, right? Cash equivalents, though, have different rules. So the gift cards to employees is going to have to be treated as additional compensation, even if it is a gift card, if it's a bonus, anything that is a cash equivalent, and it is subject to withholding. So it's a cash equivalent. It goes on their W-2 at the end of the year. You have to do federal withholding of taxes for it because it's a cash equivalent. So keep that in mind when you're doing gifts to employees.
Next question, can I deduct the free samples I give out at vending events such as like personal free trials?
Oh, this is kind of related to gifts. So this is a good question. So free samples of your product are much more akin to marketing and advertising costs than it is to gifts. So you can deduct your free samples that you give out at like conferences or something, but you would do it through the marketing and advertising method as opposed to as gifts. But I do want to say there's a special exception to that $25 rule for, those little like things that people give out that have their logo branded on them, pens, little like clips and clippy things and stickers and stuff. So if you have stuff like that that is worth less than $4 and it has your business name on it and it is distributed like on a regular basis, so less than $4, that is not part of your $25 gift exception. Those are like promotional pieces. So you don't have to count those in your gift factoring.
Also, how are joint ventures taxed? Can you please advise?
Mike can correct me if I'm wrong, but a joint venture, an unincorporated joint venture is taxed as a partnership. But joint ventures can be incorporated. So if you have a joint venture that is incorporated as a S corp or a C corp or whatever method that you incorporate it, then you follow those instructions for taxing. But I'm pretty sure just an unincorporated joint venture partnership for tax purposes.
That's my memory, but if you wanted to send me an email and send me that question, I can check into it and find the documentation that will back up what I believe to be is correct.
Is there an expense template available on the IRS website? I'm looking, but I don't see one.
An expense template? I'm not sure what you mean by that. There is a publication that will help you identify the types of deductible expenses if that's what you're looking for. And going back here to my list of publications to try to find that. Sorry. Publication 535 is entitled Business Expenses, and it will identify different types of business expenses and discuss them, and of course also non-business expenses, and discuss them and help you understand what's deductible and not deductible.
I have a separate room for my actual home office with a desk, computers, supplies, etc. But I also use my kitchen to test recipes and formula for later production. Can I use my kitchen and partial utilities in my deductions?
So the rule with home office deduction is that it's got to be sort of separate space or space that you're meeting with clients and things in. So it sounds like the room that is separate that you'll use for your business, yeah, uh, if you meet all the other requirements of the home office deduction, that is allowable for home office. Your kitchen, given that it's shared space, they don't allow you to apportion the shared space that you use for your business and your personal for your kitchen. So uh no on the kitchen. Your utilities now, because if you meet the requirements of your home office for your separate area, then your utilities you'll be able to apportion and deduct because of that shared home office space situation. Typically the way that it's done is you determine the square footage of your home office space, and then you um take that percentage of your full home and then the percentage of your utilities and stuff attributable to that space is deductible. But this is really getting into the weeds of like your specific tax situation. And so I would say general answer, no on your kitchen, sort of on your utilities, sort of on your home office space. Work with your tax preparer and your accountant to determine if you meet all the requirements of it. But I will point you towards there's a calculation, like a tax form. IRS has lots of great resources and forms. And so expenses for the business use of your home, there's a form for that also, which is form 8829. 8829. So I would direct you to also look at the instructions for form 8829 for calculating expenses for business use of your home.
Are you always open for an IRS audit on a tax year, or does it have limitations?
Um, could you say that, repeat that? I'm sorry.
Yeah.
Okay, let me go back. Are you always open for an IRS audit on a tax year, or does it have a limitation?
Oh,
There's a
there are limitations. The IRS typically has 3 years from the date of filing in order to audit that return. But that's in general. If there's fraud on the return, I believe there is a limited time frame in which the IRS can audit that return. In general, it's 3 years.
Yeah, I would agree. In general, the assessment statute of limitations is 3 years, but there are, as I'm an attorney, so classic lawyer is it depends, right? It depends. So usually IRS needs permission to extend that statute from you, and so they might send you a letter saying, "Hey, we do still want to look at this," and then there's other exceptions like Mike mentioned about fraud and other things that can extend it, and there's things that can happen without your permission if you refuse to sign that form. So if you are facing an audit that is longer than 3 years, feel free to reach out to me and we can talk about your specific situation and maybe tips or if you qualify for our help about it. But that's the general is 3 years.
Michelle, they're requesting that you put your contact information in the chat box, please.
Oh yes, yeah.
Next question, how much in Social Security are you contributing as an independent contractor while paying quarterly taxes? And is that percentage the same amount as if you were considered an employee rather than an independent contractor?
Michelle, you mentioned this at the beginning.
Yeah, hang on one sec. I want to put my direct phone number in and then I might need to rehear that question. Sorry.
Well, as an employee, the IRS is taking out Social Security and Medicare taxes from my pay and paying it to the IRS. But the IRS is also contributing its portion of Social Security and Medicare taxes associated with my employment, my specific employment. If I go out and I become an independent contractor and the IRS is paying me as an independent contractor, the IRS no longer is contributing, its portion of Social Security and Medicare taxes based upon my employment. But I now have to pick it up. So I'm
Right.
paying not only what I paid as an employee, but also the employer's share. So that is the difference between being an independent contractor and an employee in regards to employment taxes.
Right. And that self-employed tax rate again is 15.3%. I'll put that in the chat too. But that includes what Mike is speaking about, which is the portion of the Social Security and Medicare taxes. And I believe that portion of the 15.3% is like 12.2%, something in the realm of 12%, which is the portion that goes to Social Security and Medicare of that 15.3.
Stella, are you there?
Yes, I'm here. They're telling you guys thank you
Oh,
Oh,
for the
good. Thanks.
information. I'm sorry, I was actually speaking, but I was on mute. Sorry. We do have time for like 2 more questions. First question, can you deduct logos and business cards for your business?
uh,
Yeah,
go ahead.
yeah, business cards and things like that are gonna be like your marketing and advertising expense. Logos is a more complicated statement. So like if you hire a graphic designer to do your logo, that is a business expense, but I don't think it's fully deductible. sort of it's going to be in your advertising cost. But I would say definitely think about things like that you'll use for advertising and promotion, and work with your tax preparer or your accountant about determining whether those are all deductible.
Okay, we have one more question. I think this is a good one. How do nonprofits get tax exempt status?
They have to apply with the IRS, and there are forms to complete. And I could, if you're interested, I don't know, I would have to research that for you specifically, and I can get that information to you if you'd like to send me an email. I'd be happy to do that. But if you go to IRS.gov and look at, should be a link for nonprofits, I believe it's labeled at the top of the screen. Click on that and you'll find information on how to apply for tax exempt status.
Right. And it depends on what your nonprofit does. The common one is 501c3 status, but it really depends on your specific nonprofit. So contact us about it if you are interested in that, or to look on the IRS website.
All right, thank you, Michael and Michelle. Do you have any last words of encouragement for our attendees today?
I would say you guys are the engine that drives the American economy, and we want to help you in any way that we can understand your responsibilities and help you prosper. So please, I hope you use the information that was presented today. And if I can be of assistance, please let me know. Get in touch with me and I'll see what I can do. Thank you. Appreciate you giving us the opportunity to present.
Yes, thank you. And in a similar vein, I just want to say, it can, and you're out on getting your feet wet and starting your small business, it can really feel like no one is there to help you. But absolutely, everyone loves small businesses and wants to help. And there's so many great resources out there for you that we can help point you towards, that the BACP can help you point you towards. So don't feel like you're alone in this. Look for help because it's out there. And thank you, everyone.
Thank you so much for your presentation. Thanks to all of our attendees for taking the time out today. To find out more about our upcoming webinars, please visit chicago.gov/business education. Again, that's chicago.gov/business education. If you are a part of the BACP Entrepreneur Certificate Program, please send an email to bacpoutreach@cityofchicago.org. Again, that email is bacpoutreach@cityofchicago.org. A copy of today's webinar will be posted on the city's YouTube page. So that's youtube.com/Chicago BACP. Thank you again to our presenters, and everyone have a great weekend. Bye.
Bye.